What's going on, guys? This is Aaron from Departures Capital, and we're here with Marc Henderson, President, Chief Executive Officer, and Director at Laramide Resources. It's a pleasure to have you back, Marc. How are you doing today?
Yeah, great, Aaron. Thanks. Nice to be with you again.
Definitely, and I'm excited to be talking about the company, the uranium sector. It's one of the only sectors that has remained kind of, it's hanging in there, which is nice compared to the overall market. So can you start by giving us an update on the company and telling us everything that you've been up to since we last spoke, which was about 3 months ago?
Yeah, no, sure. Happy to do that. I mean, I think when we talked before, the backdrop was really this sort of emerging energy crisis. As you saw over the summer, that's like burst onto the headlines. It's gone from, the proverbial page 16 to the front page, particularly in Europe. And you've seen a lot of reaction. You've seen a lot of very positive developments on the macro front. And I think what's happened as you get down into the corporate sector like ours, all the companies that have been waiting around for this kind of conducive development environment in terms of price and everything else are really starting to move on projects. So you've had a couple of announcements of companies that have gotten funded for either a restart or a brand new project. So you've got some visibility on some new entrants into the market, and those like us that are a little further back and maybe the next cabs off the rank, if you will, we're all moving as well. So everyone's now doing things. They're making plans to get their stuff up and running, particularly the ISR guys. And, we have a big ISR project in the United States, ISR being in situ recovery. It's a, mining methodology that's, very prevalent in uranium. Kazakhstan, the world's biggest producer, it's all ISR technology. And so we've moved very deliberately now. We started drilling in Australia in July on one of our Wildcat targets. We finally got all that stuff drilled and now shipped out to the lab. Everything's very slow, by the way. I don't know if it's particularly Australia or the mining business in general, but and whether it's a hangover from COVID or whatever. But I'm sure you've heard these stories from your other clients and people you've had on the show and everything else. Labs are backed up and this kind of stuff. So it's going to be a while for results, but we're positive. We like that target. There's another round of drilling coming up very shortly in Australia on a target that'll lead to probably a incremental resource potential being added to the project. This is Westmoreland, big open pit project in Australia. And then finally, we're late stage planning on our American project, ISR project called Church Rock, which would be our kind of leading go-to first off the rank project that will hopefully be up and running here in a couple of years. And ideally will be a source of, American domestic uranium production for American reactors, which they badly need. And so that's kind of what's been going on. The macro environment's been very positive. Obviously, nuclear is part of that broader energy thematic. The German population is probably wishing that maybe they hadn't acted so hastily in turning off the reactors. There's been an awful lot of dialogue and debate inside Germany about that and where they'd be if they hadn't done that, in addition to obviously locking into a single source supplier on the gas front, which is obviously looking problematic. So yeah, I think for a whole lot of reasons, nuclear is really back in the conversation. I was just at the big industry show in London a week or two ago, WNA, World Nuclear Association in London. It's their big annual conference. And there was a very positive mood, I would say. I think people are understanding that, this $45, $50 price area that we moved up from the bear market when we were in the 20s is kind of a floor price now. And I think as we get to the higher end of that range, wherever that is, let's say $70 or $75, you're going to see a lot more activity, a lot more quickly. And I think these stocks, which as you noted, have kind of, outperformed in a bear market, mind you, so it's all relative. But I do think that that's typically what happens when bull markets end and you have a bear market. You get different leadership groups coming out of the market, and I do think energy is going to be one of the leadership groups, in the next bull market that we have. So it's a very positive backdrop at the moment, I think, for nuclear in general, and I think for our, we're one of a handful of companies. There's maybe 20 names that are in this development space that are kind of the names that people probably associate with the nuclear business.
Yeah, that's, you guys are up to a lot, and that's great to hear. So can you give us any specific updates to your drill program? Anything important that you want to share with us?
Well, obviously we want results. You can't do much with results, and when we have results, they'll be public. Yeah, that's been a little slower than expected. I do expect this second phase of work in Australia to go a little bit quicker. And as I said, it's late stage planning on the stuff in the US, but I do anticipate that'll be a Q4 kickoff. Everything goes according to plan, and then the results would flow, from that relatively quickly. One of the reasons that we're doing that is basically to enable us to do there is a 43-101 in the resource, but it's all inferred. We really, as a result of having our own data or validation of the data set, it allows us then to do an economic study, a PEA, basically, which will give people a sense of, what the economics of the project look like, where that project stacks up against other peer group competitors, throughput, this kind of thing. So, I mean, that's obviously a big milestone for us, and we're thinking that's probably a Q1 23 kind of milestone. So there will be a whole series of more interesting corporate specific information now rolling out of Laramide.
Great. Look forward to covering that. So, as a company, you have multiple projects, multiples at various different stages. So at this point, what would you say, which project is your, main area of focus right now, and why, or the most important project to you?
Well, I think our US project, obviously the US ISR project, is probably the number one focus, mainly because in terms of the permitting situation, it's the farthest along. Like, we have an NRC license, and we have all the permits we require, but one in New Mexico, and that one basically is a resubmittal of a permit because the state actually changed the restoration standard back in 2015. So we basically have to do a resubmittal and meet the new standard, and it's just one of these things that takes time. And we weren't going to kick any of that off, obviously, at $25 uranium when there was zero visibility on when you could produce anything. But as I said before, I think the price running up, and I think people feeling very confident that this is a market that is going to be in good shape for a long time now, because there's a huge deficit between newly mined supply and what you need annually to fuel all the reactor demand. That there's a confidence level in the industry now that it's time to get moving. It's time to get your permits, time to get your projects in shape, get your development plans together. The US project's also the least expensive from a CapEx standpoint, so it makes the most sense to really have that be the first thing that underpins the company in terms of cash flow and what have you. The other two US projects we have that are potential producers down the track, they're either already permitted in the case of this small LaSalle project in Utah, or we're back getting the final permits, or in a process where we want to have those. We want to have the permits in hand so that we can be shovel ready everywhere. Australia being the laggard, because we're really waiting for a political signal on that one.
So has your business been affected at all due to, these higher inflationary times?
I mean, we're a small company in a development stage, and so luckily we're not in a build stage at the moment, where I think you're seeing, certainly in, I don't know what it's like in the uranium space, but I imagine, given what goes into a lot of the projects, in terms of materials and stuff like that, there is obviously cost inflation and stuff like that. We're seeing inflation in all the bids you do for any of the kind of work you're doing. Absolutely. And again, that just means that the price needs to be higher. I mean, the suite of projects that's available to fill the supply gap are the suite of projects that are available. And if you were in the lowest quartile before, whatever the number was, you're still going to be in the lowest quartile. You just may have to raise your expectation of what the cash cost per pound is at the end of the day. And so there's an element of that going on. It does take some time with the utilities, because the utilities are the ultimate customer for all of these nuclear companies, uranium companies. And notwithstanding that they desperately need each other, the utilities they play pretty tough in negotiations. They want to get the lowest prices. It took them a long time in the last cycle to wrap their head around the fact that they were going to have to pay $50, say, long term. So that's always a little bit of a battle. And there was a very big cheap supplier called Kazakhstan that kind of emerged. But the easy days of the Kazakh cheap pounds at scale are probably approaching, and they're going to be in the rearview mirror soon. So I think the cost structure of the entire industry is going to go up as a result. I mean, Cameco has been very specific in terms of saying the kind of price they want to see around their contracts that they want to get for their two big mines in Saskatchewan. So, and they're the industry leader. So I think you could take a lot from them if they say, really, we need 50, and this is for the best quality projects. Then obviously that's a kind of number that's going to, I think that's the floor price.
So uranium and uranium equities have been outperforming the broader market during this downturn. So why do you think that is? And, what are your thoughts on just the way that things have happened?
Well, I mean, I think that we're starting to get connected to this broader energy thematic, which I think historically the uranium really wasn't. I mean, I don't think people thought a lot about where energy came from and all different forms of energy. And with the oil price spiking and then the problems that Germany has with gas and all the gas is all used in industry and all this kind of thing. I think people have got a lot better the general public has a lot better understanding now, or they're starting to get a better understanding of the importance of energy and all its forms and where it goes. And so I think nuclear, suddenly everyone realized it was always there. It was always a key piece, and it was doing its quiet 20% of the electricity generation in the world, and obviously could do a lot more. And I just think people have kind of locked into that. And that we got in a situation because of Fukushima, and people went away from nuclear for a little bit. And then I think the emergence of Kazakhstan as a massive new producer that just really didn't see the market signals quickly enough because they were a state actor and this, that, and the other thing. They kind of overproduced, and we had a crazy 10-year bear market. Yeah. And I think that led to a thing where the deficit just got built up to where it's problematic and it needs to get adjusted really quickly. It's not kind of unlike the Fed going, no, zero interest rates made no sense. And no, we can't go up from 0 to 4 in 25 basis point increments. And I think that's kind of what happened in nuclear. We went from 25 to 65. We got to fix this. We got to fix it fast. We've had a little check back, a check back to 45, and now we're around 50. But I mean, the journey is not stopping at 50. I mean, I think we're going to go to a number that's going to be a lot higher. And it's a small pool of companies. And we're fortunate because it is its own little thematic within energy as well. So we've got passive flows now in these ETFs, and I think there's 4 of them now. The 2 biggest ones are each one's $1 billion, one's almost a multi-billion-dollar fund. So there's meaningful passive flows that can come into the sector quite quickly. And so it attracts all that other capital that wants to be in thematics that are working, and because there's flows. And so you've got this market structural setup that actually is quite positive. And so, retail can get in and out. The stocks are liquid. It's the sector's in a pretty good place as a result of that.
Yeah, very exciting times that we're in, especially for this sector. So how does the company plan to create shareholder value moving forward? And what should we be excited about?
Well, I think you got to be excited about the potential for nuclear to really get, a growing share of a growing market. That's always kind of the story. That was the nuclear renaissance story from previous cycles. And obviously now the companies are really out actually doing things. There's going to be more visibility on things like production and cash flow coming to the whole sector, but certainly to companies like ours as we basically lay out these plans for what's going to happen. So I think, and I think the numbers are quite good. Like if you see the other areas of energy that are working, like oil, the oil stocks went from being, worst to first in a way. They went from being, these companies were worried about them, they're going to go out of business, they got all this debt. Next thing you know, they're paying special dividends and they're trading at 3 times cash flow. So, and there's still a lot of room to run, right? Because they're really undervalued relative to their contribution to society. Should the oil and gas sector ever have gotten to 3% of the S&P 500? Probably not. And I think, nuclear is not in the same category, but it's pretty important. At the end of the day, even if you take the biggest company, I don't know, with Cameco, I think, and it's got a market cap of 10 or 12 billion or something, some number like that. It's a pretty important company. It's probably more important than your 5th largest social media company societally. And so I do think you get some kind of reappraisal of that goes on. And then obviously if you get the price where it needs to be, the companies that produce, they end up, everyone realizes they got big fat margins and they're quite good companies to own, right? So
exciting times. So where's the best place for investors to find out more information on the company, and where should we go?
Laramide.com.
All right, Mark. Well, thank you so much for the updates. Best of luck. Hopefully the market continues, stays strong. And yeah, I look forward to having you back on for more updates.
Yeah, no, thanks, Aaron. Appreciate the invite and look forward to talking again. Have a great day.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.